Trading is 10% skill. When you're dealing with money, your emotions are attached. Trading was so hard for me until I figured out these 4 concepts. Hey future millionaires, and my name is Tanisha T, and in this video I am going to break down these 4 concepts that totally changed my trading strategy for the best. All right, are you ready? Let's go. The first concept that I had to figure out while trading options is that FOMO is not just about missing the party. So in trading options, FOMO is a real thing, fear of missing out. If there is a stock that has made a move in whatever direction, if it went up, the price just shot up, right? Crazy bars, crazy volume going up, and you were looking at a different stock, or you were eating breakfast, or you were checking Instagram, and the stock just went crazy, and you're like, oh my gosh, should I jump in? Is it possible? Is it still going, or is the move, is it done? You will save yourself a lot of stress and a lot of losses if you stay out of moves that have already happened. The key to getting a good play or making a good return on your investment is being able to anticipate the move and get a good fill earlier in the move, okay? So 9 times out of 10, what I tell my friends in my Discord is that, hey, if the move has already happened, we still have 6 hours to find another trade, right? So FOMO is a thing. You have to learn how to manage your FOMO. And I learned very quickly that if a move has already happened, you should stay out of it because you will be in the losses. You will be losing at that point, okay? So let's go on to the next thing that I figured out to help make trading much easier. The 90-10 rule, or the 90-10 theory, is so true. And now on the back end of learning how to trade and being an educator for individuals learning how to trade, it's even more relevant. What trading is, think of it as a whole pie, 100% as a pie. But if you think about it, trading is 10% skill, like the bars, the volume, using the Fibonacci, using all the indicators, right? The 200 EMA, the 20 EMA, the VWAP, all that stuff is 10%. If you really think about it, the 90% that makes you a profitable trader, right? Or a good trader is psychology, trading psychology, how to manage your risk, how to manage your emotions, how to manage FOMO, how to trade the next day, how to pick yourself up after a loss, how to manage all of these things while being able to pay attention to the stock market is so crucial to your longevity as a trader. Because 9 times out of 10, when you're dealing with money, your emotions are attached. At the end of the day, you can try your best to take your emotion out of it, but it is attached. How do you manage this 90-10 situation? You're trading psychology. First of all, do not trade with money you're not willing to lose. That's 100% a non-negotiable. Right? We're not trading with a car note. We're not trading with our mortgage. We're not trading with our rent. We're trading with money we're willing to lose because it is a risk at the end of the day. What I figured out quickly is that yes, the bars are intimidating. The volume is intimidating. The tickers, all this stuff are intimidating. But once you have figured out that 10%, then you have to focus on the psychology. How do I manage my feelings, my emotions, my strategies, and staying inside of my rules and my strategies to become a profitable trader? So for example, when it comes to the 90-20 rule, 90-10 rule, I should say, I first paper traded, like I like to tell my Discord friends, to paper trade in the beginning to get comfortable with the platform. So on paper trading, I was great, truly. Like I had green week, showing off to Mike. Yeah, I did that. I did awesome. Yeah, I made $1,300 on Apple. Yeah, paper money. But when it came time for me to put my real money in it now, and I had my real emotions attached to my money, then it got real quick. Okay, so I had to tap into my trading psychology. What was I doing incorrectly? Was I staying in my rules? Was I following my rules? Was I following my strategy? Was I journaling? What did I do wrong? These are steps and things that will help you manage that 90%. And I promise you, if you look at trading as a pie and know that the bars and the VWAPs and the volume and the tickers is the smallest portion of you as a trader, you will be more profitable because now you're aware of your psychological side, the emotion side, and we're emotional beings. So if we can control that, then the 10% will shine. Got it? The next thing that helped me get better as a trader is the 20-20 rule, okay? What I like to say is that you are going to be risking 20% of your account to make a goal of 20% return, okay? So we have to have a goal of how much money we're trying to make. We're not like, oh yeah, we're just trying to make some money. And the reason why the 20/20 rule is helpful, especially as a beginning trader, is it manages your losses, right? Or it manages your risk. Because really and truly, you're not risking your 100% of your account. You're only risking what? 20% to get a 20% return minimum. There are definite days that you're going to see a 30, 40, 50, 150, 200% return on your investment. There are days that are like that. But if there's a situation where it is a negative trade, right, or a losing trade, how much did you risk? Only 20%, right? So that is how we're able to do what? Live to trade another day. We're not trading 100% of our account of every trade, right? Because guess what? Your buying power will be wiped out in trade one and you're done for the day. And you may have missed out on that move and you're going to be forcing yourself into FOMO when you didn't have to. Does that make sense? All right. So the 20/20 rule, risk 20% to gain 20% so that you can have more funds to enter other trades in that particular trading day. Thank you so much for sticking around this video. And if you're interested in more trading information or getting inside of my Discord, where I have the free channel and then I have the premium channel where I call out live trades and break down my trades for the day, the link is in the description box below. So check it out. Okay, guys? So last but not least, the last thing, oh my gosh, that revolutionized my trading as an option trader is figuring out how to deploy my runners. I think about runners as like little men on the stock market that are running around to go get me more money. However you want to think about it, I just see them running to grab money from me and I'm like, go runners, go. So that's the visual I have when it comes to runners. So for example, if I'm in a trade, right? I'm in a Microsoft trade and the trade is going great. I predicted it was gonna go up and it's going up. I have profit targets, right? I like to draw 3 profit targets going up and 3 profit targets going down. Those are literally, once the stock or the price action hits those targets, you can take your profit. So just to elaborate, the term that I'm talking about with runners is called negative risk management, okay? So negative risk management, what it does, it allows you as a trader to sit in a trade longer, right, for a larger possible return on your investment and still securing money in TP1. The point of runners is for you to be able to make more money in a trade and stay in a trade longer. So you're able to take profits at different levels and still be in the trade longer and not risk all of your money anymore. So I hope you enjoyed this video and learned my 4 things that helped me revolutionize and completely change the way that I traded. And I hope these help you on your trading journey. If you want to know more about trading and get into a community of like-minded individuals, check out the Discord in the description box below. I have a free channel, but I also have a premium channel that I do call outs and also education on breaking down my previous trades, okay? So thank you so much for watching, and until next time, I hope you have a blessed day, a blessed week, a blessed month, and a blessed rest of the year.